All right, VA assumable loans. What are they and how do they work? So, over the past few years, we have seen some of the lowest interest rates available in the country, in the history of the country to be exact. We've also seen some of the highest rates in the past 5 years. So, VA assumable mortgages have been a hot topic lately. And here's really what you need to know to set yourself up for success. Maybe you own a home and you're thinking of offering your home as a VA assumable option to bring in more buyers. Maybe you're a buyer looking at listings online and curious, what does this assumable mortgage mean? Because that shiny object out there is that low interest rate, especially when the national average as of today is about 6.25. When you're seeing a 2.25, you obviously want the lower rate because you're going to have the lower payment. But there's some things that you need to know about this process and the program. So again, we've seen the lowest interest rates. Many mortgages are 2.25. There's a statistic that over 50% of mortgages in America range from 2 to 3%. A lot of people are holding on to those low interest rates and not wanting to move. But if they are, some folks are offering an assumable loan. So the way a VA loan works is that VA loans can be assumed by both a veteran and non-veteran, aka a civilian. But there's going to be some catches when a civilian takes over a veteran's loan that I'll discuss later. So just keep in mind, a VA can be assumed by both a veteran and non-veteran. Who does the loan though? This is the biggest thing that you need to know. So you're not going through a licensed mortgage loan originator. You have to go through whoever that current servicer is. Who is that owner of the property making their payments to? That's who you have to go apply for the loan through. So that could be PennyMac, that could be UWM, whoever it is, right? You need to know, if you're looking at this from the buyer perspective, you want to buy a home with an assumable loan, you have to go through whoever that current owner is making their payments to. The big thing that you need to keep in mind is the time that these loans take. This is not a quick process. If you bought a home before, you understand you get in a home within as little as 30 days. Some folks, it could be as quick as 14 days. But that's not the case with an assumable loan. It could take anywhere from 60 days. The longest I've seen is 6 months. So this is extremely important to know if you're on a quick timeline. So maybe you're PCSing, you're relocating for a job, whatever the case may be, assumable loans are not the fastest option out there. And I'll be frank, why is that? Why do they take longer? Well, one is banks don't make money off assumable loans. They're just transferring it from one name to another. There is no revenue for the bank, so it's not priority to them. I know that sucks, but it is what it is. The other thing too is assumable loans also have to be sent directly to the VA for final approval. This is the one-off scenarios where the VA actually has to look at the situation and approve the transfer, okay? Most loan companies can underwrite and approve VA loans 99% of the time. This is that 1% of the time where it has to go directly to the VA for approval. So again, that timeline can be anywhere from 60 days up to 6 months. The big thing is filling the gap. What does this really mean? So I'll use my property for an example. I have a home, I have a 2.25% interest rate. I owe about $200,000 on that home, but it's worth $300,000. Well, if you're a buyer looking at assuming a VA loan, you need to know that you can only assume what I have left on my loan, which is $200,000, but my property's worth $300,000. I want my $300,000 for my home because I'm not just giving you my property over for nothing, right? I want to make my money because I know I have the money in the property. So here's what happens. How do we fill that gap? I want $300,000, you can only take over $200,000. We have a difference of $100,000. And this is what stops a lot of people from being able to go through this process. Well, that $100,000 typically has to be brought in a form of a down payment, cash money. Not always, but that is typically the standard way. You need to fill the gap with funds that you already have, okay? And this is where I always ask, do you have the $100,000 to fill the gap? No? Then this typically is what deters most people from going through the assumable loan process. Now, there are some financial institutions that will allow you to pull out a second loan on the property to fill the gap. However, it has to be approved by whoever you're going through to take over that loan. That servicer has to approve that second mortgage. And the big thing is, can you qualify taking on additional financing? That's a big thing that knocks a lot of people out of this, being able to go through this. Now, One thing I want to talk about is the risk that you have if you're a veteran looking at offering your current home as an assumable mortgage. There is a lot of risk. And what I mean by this is because a civilian can take over a VA loan and a veteran can take over a VA loan. I'm going to start with the veteran side because it's pretty easy to understand. If I am a veteran seller and another veteran wants to step in, they can fill the gap, they can take it over, no problem. It's not an issue because what happens is on my certificate of eligibility, we transfer that home to the buying veteran certificate of eligibility. So I get my full entitlement back. Okay, so the way that works is a veteran uses their entitlement, they take over my VA loan, it's transferred from my certificate of eligibility to their certificate of eligibility, meaning I have full entitlement back to use my VA loan however I want. There's no issues whatsoever. So transferring eligibility, right, to a civilian, you can't do it because they don't have a certificate of eligibility. So this is where things get really tricky, okay? So let's use my scenario. I have my home, I want to offer it as an assumable loan to the general public, and a civilian can step in and assume my VA loan. Here's the problem though. I did my time in the military. I have a certificate of eligibility. That civilian does not. So if I want them to take over my VA loan, it's going to show on my certificate of eligibility that I still have a loan out there. What does this mean if I want to buy another property? It's going to reduce how much I can use in purchase power on my next home with my VA loan. I don't have what we call full entitlement back. The other risk, if a civilian steps in and assumes my VA loan, is that if they were ever to foreclose on it or a short sale or whatever the case may be, it's going to hurt me. I'm going to lose that portion for life. It's really detrimental to let a civilian take over your VA loan. I never recommend a veteran to do this. Veteran to veteran, you're in the clear. Veteran to civilian, steer clear, okay? That is just what I say. This is a personal preference of mine because I've seen veterans get impacted by this. They let a civilian take over their mortgage. The civilian foreclosed on it. That veteran loses that portion of entitlement forever, okay? Until they satisfy the debt. But why are you gonna satisfy a debt that you didn't screw up? Okay, so there's a lot of risks that I feel like veterans need to understand. Veteran to veteran, again, you're in the clear. Veteran to civilian, steer clear. So big things that I just want to recap on is that we've seen rates at all-time lows and now we're in a higher interest rate environment. These look really enticing to the general population to be able to offer it. A veteran can take over a VA loan and a civilian can assume a VA loan as well. So there's no difference there. Who does the loan? Well, it's whoever that current owner is making payments to. So you need to go apply with that specific lender, right? And this is where things get tricky. They may have additional rules or overlays for approval. You may have to have a 620 plus. You may have to have a 640 plus credit score. They may not like it if you have a higher DTI ratio because not every lender is created equal. The timeline, you need to know that these are going to take some time, anywhere from 60 days to 6 months. It is not a quick process. Filling the gap. Do you have the money to fill the gap? Because you can only assume what is left on the loan balance, but you're going to pay whatever the home is worth. You need to be able to fill that gap. Risks for veterans. Big thing here. Veteran to veteran, all good, right? We're transferring my eligibility to, let's say, your eligibility if you're a veteran, your certificate of eligibility. If I'm the selling veteran, that's giving me my full entitlement back, allowing me to go purchase whatever price home I qualify for, moving on. Veteran to civilian, you're taking on a lot of risk. I wouldn't recommend this. If you can avoid it, I would avoid it. And this is just me personally speaking, unless maybe you're in a difficult financial situation. So I hope this information was beneficial to you. If you're thinking of doing a assumable loan, you need to know the pros and cons of it. If you have any specific questions that I did not cover in this video based on your scenario, please comment, reach out to me. I'm here to help. My name is Zach. I'm an Army veteran and licensed mortgage professional, helping veterans leverage their VA loan the right way. Thank you so much.